Hey everyone, welcome back to Crypto Cash. Thank you so much for joining me. I hope you're having an amazing day. We're taking a look here at FLM. I was asked by a lot of individuals real quick here recently, can you cover this coin so we know what's going on? And yeah, of course, we'll definitely cover it. Simply put though, it has a history of pumping and dumping, so please just be aware of that. If you're in profit right now, it wouldn't be a terrible idea to trim some of that profit so you don't lose out on some massive gains. Okay, so again, just some friendly advice there. All right, now if you are new to the channel though, just know I'm not a financial advisor. I've been teaching for over 20 years and just love helping people become better traders. So cryptocash.tech is a site. Link down below if you want to become a better trader. We got an awesome Discord here where we have tons of educational content, signals as well, of course, where we take profit pretty consistently there. And we also got a Telegram and Twitter account. Links down as well. You can see some of my signal accuracy there for the month of August. All right, so here we are with FLM. What are we looking at and what do we want to do? So simply put, I would steer away from this with a 10-foot pole if you're trying to find a short entry. Main reason why is because it's running and trying to catch a falling knife is never the greatest idea. You might get lucky, yes, and there's a good chance it may not continue higher, but if it does, you'll get wrecked on a short. And obviously if you're in a long right now, do you want to take profits or not? Short answer is yes. You probably want to jump on in there and take at least 50% profit so it pulls back, you are in the green, and kind of run a strategy, something like that. Once more, we don't know a lot yet, but let's go ahead and take a look at the history first and just kind of let you know, because again, when it comes to trading, what is it? Well, good technical analysis is simply finding a pattern and trying to identify when it's going to happen again. Okay. Now, if we look at patterns here, past patterns here, let's take a look at the most recent pattern here, where the price action in 2 days essentially jumped up a total of about 212%. The following day, keep this in mind, following day, the price came down somewhere in the range of about 60%. Right? So a lot of profit was kind of left on the table if you would just say bought here and sold here. Okay. So again, we are already halfway through that phase right now where the daily candle is overextended like crazy, and there's a good chance the third day will be a red day because we got, look at this. 1 green day, 2 green days, third day is red, okay? So just keep that in mind. Same thing happened here as well, albeit not that strong. Still a good 30% pump resulted a day later to close almost the same exact place in which it opened. We keep looking back here too. Almost every single pump that hits this hard, this fast, comes right back down, okay? So it's a pretty consistent scenario here for this coin. It goes up and then it goes down. It doesn't usually stay up for too long. It did stay up previously, of course, but that was back in 2021, and the market was tremendously different at that time. So we got to recognize it's important not to get greedy in these circumstances. Yes, it could continue to run to 25, 35, 45 cents. You might get lucky, but you want to make sure that you consider taking some profit too. Okay, and I'm not telling you to close your entire position. Just saying take some profit out of that so you can ensure that you walk away feeling better about it and just let the rest ride. I typically like to take 60 to 80% in my first pull and then just let the rest kind of go and then take profit as it continues higher, or just set a stop loss at break even, comes back down, you're still in profit. Okay, different strategies, but that's essentially what we're looking at. All right, so let's take a look at some TA though, of course. That's why we're here. Obviously, we don't want to overlook that, but just know that the number is going to be a little skewed based on the simple fact that there's a lot of volume in a short amount of time. Speaking of volume, let's take a quick look at that here. What do you know? Massive spike in volume, massive spike in price. Days later, the price comes back down. So unless we can maintain this volume tomorrow, there's no reason why the price is going to sustain itself. Okay, we look at this history. Look at how much times it does this. Massive spike in volume, price comes right back down. So I'd be super, super surprised if this price can sustain itself and hold at this level for much longer. That being said, let's go ahead and take a look at a few other things here. So volume profile, obviously going to be at a lower price point, roughly 7 cents. That's a common retraction place. In other words, the price pulls back. We should see somewhere in the range of the most recent high working as the current low. Okay, so to make it simple, when the previous price action, the price action comes back down, if it were to, it will hit this most recent high section there and essentially give us that confirmation that it's going to bounce off that level. It's a common characteristic, not 100%, but that's usually what we see. Okay, so that's generally what to expect if a price pulls back most recent high, roughly there at about, just say 7 cents even. It's like likely retracement area. In fact, we can pull up the Fibonacci retracement and kind of see, typically right there you go, 0.786, common retracement level. Okay, so it's already kind of forecast there. So let's just go ahead and put a little line in here. Let us know that that's roughly where we could see the price action bounce if it comes back down that low. Taking a look at the 4 hour, let's go ahead and see if there's anything telling here. We are seemingly overextended. Let's take a look at TD sequential. We hit a 9 here previously, roughly about 24 hours ago, and it has not slowed down since. Volume has continued to increase, and as it does, it will continue to increase in value. Now, you got to keep in mind, right now we're starting to hit that overextension again. We're kind of almost double that, and that's not a good place to be. It's kind of ugly. Key takeaway here is that we're above RSI. We are considered to be overbought, so in turn, this price action is going to be sold. We should see the price pull back here in the near future. That being said as well, we can also kind of disseminate that with the RSI being up over 70 on multiple time frames, the price is due for a correction. In fact, it's kind of pulling back right now. We'll see if that level will hold. Potential Fibonacci retracement levels, just so you know, if the price were to just say bounce, it's less likely, but if we were to see a bounce, it'd be at 10 cents even, 9.1 or 8.2. Okay. Now I'm going to send these charts out here as well. I always send out potential playout charts on my Twitter and Telegram, so you can kind of be familiar with what may or may not happen next, depending on the circumstances. Okay, so just keep in mind those are available if you want to consider following us over there. But ultimately here we can see we're overextended on multiple time frames. The hourly is overextended too, albeit just a little bit lower. And the reason why it's lower is because it had a chance to reset, but we hit 1 9, 2 9s, and then a small little reset, bounce off that key level support at 7 cents and continued higher. So it already broke through this level and then tested it. So it's a common characteristic in cup and handle patterns too. While this is not necessarily, while this is not necessarily a cup and handle, obviously, it's kind of ugly, if you will. It's very common for the price action to break through a resistance level, which is coincidentally this most recent high, and to come back down and retest it as a low. And if you zoom in, you can kind of see that it broke through this level here, comes back down to bounce off that. That would have been a good entry there in hindsight. Again, hindsight's 20/20 when you're trading, right? always a professional when the price action is behind you and said, shoulda, coulda, right? Oh, I expected this to happen. Generally speaking, that's not the case. You just kind of got lucky, right? A lot of folks get lucky. You can't expect things, don't get wrong, but in circumstances like this, when there's Fibonacci retracement levels and the price breaks through a resistance level, it makes total sense that you can bounce off a key level support, which was a previous resistance turn support. Okay, those things happen quite often. And you know why it happens is because the psychology of trading shifts in momentum, right? You got people thinking it's a good value at that level. Once it passes that level, it becomes overextended. They sell. Price pulls back. And once it hits this level, oh, that's right, that was a good level here, that was a previous resistance, and my mindset has shifted now to that to becoming a good value now that the price is past that, and people buy in at that price point. So again, as we can see, price is working its way down here to 9.1 and 8.2. My speculation is over the next couple of days, we'll see some in the range of 7 cents, and the price will continue to average itself out there for some time, and then potentially leg up again when it feels ready. So ultimately, coins like this, you want to be careful and just avoid them at all possible. That's my personal opinion. I'm not much of a risky trader. I like to take smaller leverage and smaller position size trades, and that helps me survive, right? So, I mean, in truth, nobody's perfect. But if you see something like this here, there's a reason why the consistency is there, is mainly because we use low leverage, we're using less risk. So in truth, yeah, there's a lot more profits that I could have probably taken here, but we wouldn't have been able to survive some of those ugly candle wicks from Bitcoin to be able to hit those targets too, right? Liquidation is a terrible thing. It sucks. It hurts. And we try to avoid it at all possible. Either way, nonetheless, what I'm trying to say here is that trading a coin like this is very risky. So be careful doing so if you're going to trade right now. Try to use these key level Fibonacci retracement levels. I would personally avoid it just because it's just an ugly mess in my personal opinion. And I don't like trading conditions like this. Had we took in a trade a long time ago, of course, because of previous reasons, just say, for example, like a liquidity sweep or a fair value gap, those are things that allow you to get into positions like this better. Those are things that we do too as well. That's what set me up for that 90% success last month. But at this point here, this is not a good trade. I'd just be very careful. You should have taken profits by now. Since I started this video, the price has dropped almost 20%. All right, so again, not the greatest. Thanks again for watching. I hope you learned something here today. And if you want to become a better trader, again, cryptocash.tech is a site, link down below, of course. We do have a summer sale going right now as well. Be sure to use that coupon code. If you have any questions, feel free to direct message me, Telegram, Twitter, etc. Discord as well. We'll look forward to working with you. Have a good rest of your day. Thanks again.